What would you do if I sang out of tune? Would you stand up and walk out on me? Well, don't walk out on me, even though anytime that I sing to you, I do sing out of tune. Guess what? We got a special sponsor today. This show is sponsored by The Summer of 77, a horror story. Boo-doo-doo-doo-doo-doo-doo. By Sean Kidd. Summer of 77 by Sean Kidd. Sean is a friend of mine from this channel, from this YouTube channel. So I want to thank you, Sean, for sending me that book. That is very thoughtful of you. And I've read only about 10 pages so far, but I'm already very interested. And what I like about it is the feel of the book. Even though I don't like to be scared, I do like to be excited. I think this book is going to be very exciting. And the feel I get is that it's going to be speaking directly to a guy, right around my age. So check that book out, Summer of 77, on Amazon.com or wherever books are sold. The author is Sean Kidd. So thank you so much for that. And here we go again. What do we got today? We're down about $1,900 bills, but let's see what's on the board because we got some real action going on, as you know. So looking over at the S&P, we're about 4376. So next stop, 4,000. At least that's what we're hoping. Get to 4,000, break through that. Then we're going to 4,600. Mark it, write it down, mark it with a B. All right, let's take a look at the big board here. AbbVie doing good because these calls are doing good because AbbVie not doing good. Same with Bank of America, 83% profit there. CRISPR, though, that thing's down. This trade is down on me. And why is that? Because CRISPR is on the highway to high. It's on the highway to high, 56.15 currently trading at. So my $47 calls are underwater. But let's take a look at it because I did prepare the spreadsheet for you and I. You and I must make a pact, just to take a quick look to see where do we stand with this trade, because as it stands at this moment, hey, there's my head in the middle. It's a little bit too far away from me. It got away from me being up so high. Now, it doesn't mean there isn't tremendous volatility left in this. In fact, there is, because after close today, CRISPR will announce their earnings, and they're going to be, negative. But the good news that CRISPR has experienced is they got some couple of pretty much thumbs up from the FDA on a big, their big deal that they're working on, their gene, what do they call it? Splicing, gene editing. It's crazy stuff that they're working on over at the CRISPR, but they're looking to change and save a bunch of lives. So let's take a look at CRISPR and see where we stand. Started with selling puts, then we went to calls, rolling calls, selling puts, rolling calls, all the way down here. Started on August 21st, and then if we go through this Friday and those shares are called away, that would be November 10th, and that was 81 days of trading CRISPR for a total of $1,505 in premium. Now, we will take a little bit on the chin. We'll lose what, 26.52? $52 bills will have to come off of this. So we need to let's add a line to that. Let's insert a row, one row below, and then let's just put it in here for the record. 1110 assigned. Those shares called away at 47, and then 47. Let's do our math, right? $47. Where's the abacus? Really clogging up the stage here. $47 times 400 shares. Whoa, equals a lot of money. $47 times 400 shares equals 18,800. Okay, so that would be 400 shares at 47 equals 18,800, right? Well, we paid $18,852, so we're going to be down $52 on that. So let's do that. Put that in there. That changes the number to 1453. Go up here, 1453. Right? Get the abacus back out, and then that's going to change our percentage. This is going to lower this 36% annualized to what? Well, let's find out. 1453 divided by the invested amount of 18,852 divided by days in the trade 81 multiplied by annualized 365. Now we're at 34.7%. 34.7. Still not bad. We'll take that all day, every day. And how many times on Sunday? Dos seques on Sunday. So let's get back to the big board to see what else we got going, because we got another one that's just, it's going to end our DataDog career so far, and that would be, so I was a little early on a couple of my oil trades. I was looking to do the money tree trade, or as my friend Sam I Am would say, the quad D. And that's where we sell puts to get in. So we collect premium. That's one ringy-dingy. Then we lock in X dividend date so that we're going to get a dividend. That's two ringy-dingies. Then we sell calls at one strike above what we paid, collect premium on the calls. That's three ringy-dingy. And then four ringy-dingy would be the share appreciation. So in this case, if we were assigned 144, we'll be looking to lock in the X dividend date of, where's my notes? 11/16. So that's next Thursday, and then the dividend's going to be $1.51 a share. Hello, and we'll be looking for 500 shares that we'll have, and then turn around on a green day and sell calls at 145. So that'd be the money tree, aka the quad D trade. So moving on down here, I was probably a day early. No, not a day early, because I sold those last week. Anyways, we did collect a bunch of dollar bills for doing so, almost $900 on the puts. But here's DataDog, $88 calls. DataDog, look at that. It's underwater big time because DataDog is going off the rails to Party City, 103.72, up 30% today. So I did get DataDog right. But where I was wrong is I should have just sat on those shares instead of coughing them up for $88. And I've looked, I just can't even roll my way out of this unless I went out a long time. And who knows, the next time DataDog might be at $88. It could be, it could be 30 days from now, 45 days from now. Hopefully never for DataDog, but for us, if it comes back to us, then we'll get involved. But I did run some numbers on DataDog, because let me show you what else is on the board for the data and the dog. That'd be these $79 puts. And these started at it like $84 puts. Then we rolled them to 83. Then we rolled them to 79, all the while collecting dollar bills. In fact, we're going to eliminate them now just to get them off the table. We'll be able to get out for $1 a piece. There's 4 of them. So it's going to cost us $4.12. Buy those closed and then release $31,600 in collateral, which will then create more money in interest being in our settlement account than it is waiting for this thing to expire at full profit. So there's our $4.12. Write that down. Write it down. 412. Okay, so that one's off the board. Right there, but let's go to the DataDog spreadsheet just to see what's up. So there it is. In fact, I made a mistake on DataDog also. We'll get to that right here and right now. So we began working with DataDog in August 11th to be exact. We were selling puts, buying them to close, selling more puts. Then we bought, I was like, hey, DataDog looks like a great company. And it does, and it is. Bought 100 shares on September 21st for $88.87. Then we got crazy, involved with this $97 put, rolled it to 96, and then we got assigned at 96. So we paid $96 for those shares, and then sold some calls. We bought more shares at 87.14, blah, 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 blah. Continuing on, we bought another 100 shares. Wait, you're giving it all away. Bought another 100 shares here at 81.98. Got to move my head just to show you this. This is not clean. In fact, it's ugly. But this is how I work just in my own mind. So my put collateral it wasn't this average, but I was erring on the side of caution, which is I'm sure the average put collateral was less than 33,600, but I put it in there just to be conservative on running the numbers for this trade. And then we have $35,400 into the shares, the 400 shares that we own. So the total of those two is 68,800, if you know what I'm saying, because that's going to bring us to the math here. So if we roll on down, to, if we're assigned on Friday, which is highly likely, $88 on our 400 shares. That's 35,200. Now, where's that discrepancy? So in my mind, the whole time, I thought I had $88 into the shares that I owned, but really it was $88 and where's the average? $88 and change. Anyways, 88, is it 88.50? Let's go to it. And whoa, let's go to Datadog to see. I think it's 88.50 we are in. And for some reason in my mind, there it is. It was $88 the whole time. There you go, Bart, for thinking. So it's really 88.50. Shares will be called away $88. Yeah, we can roll them out long way away to try to capture some more share appreciation, but we're just going to put the money into our pockets, and then we're going to end up with this. So there, if we're called away, we're going to lose $200 on the sale of those 400 shares, and then collect a total, including the loss and the buybacks, the buy to closes, at $3,372 and 91 trading days, or 91 calendar days, I should say. So the math is 3372. Then we added those two numbers together to come up with that $68,800 in total collateral and share price, divided by the 91 days in the trade, multiplied by 365. So we end up with about 1960, and that would be 19.6% annualized according to our Fantasyland math. Now I know that'd be a little bit over 20% if we dug down and got the exact number of the put collateral, but it was quick math just to get this spreadsheet ready for you and me, you and I. So 1960, we would take that return all day, every day as well. So both of those will end. We just ended the puts. As you saw, the calls will likely end on Friday unless there's a crazy turn of events between now and the end of business on Friday, on Expiration Friday. So back to the big board. What else we got cooking up there? So we're going to be losing CRISPR, losing Datadog, possibly losing Gilead Sciences. I think they report today. Do they? Got a notice from a bunch of them today. Let's see. Where are those notices? Where are you? La-dee-dee. Yeah, Gilead announces today after market. Boys in the Hood also today. Enovix today after Arway. I never talk about Arway, but I do own 400 shares of Arway. And they're after market today. And then, of course, my big sweetheart, Devon Energy. I'm very nervous about Devon because oil earnings, the reports have not been coming in great. But what I'm super excited about is what are they doing with the dividend? Give me some big time special dividend to end this year, and I'll be like, I love you forever, Devon Energy. So Devon aftermarket closes today. CRISPR also today, so that one could be very volatile. And then Nine, I've got shares of Nine as well. They announced today after the market as well. So it'd be very exciting. So depending on what Gilead does, guess what? It's either going up or down. Very profound. It is. So I'm prepared to let Gilead go. In fact, I think did we already talk about Gilead? Look, one of them is one of the spreadsheets is called poop. More on that later, not in this video. I got a whole video just for that. Where is the Gilead ad? There's Gilead right here. Let's just see what's up. Does that cover it? Yeah, I believe that'll cover it. We'll have to add in there the extra days as far as if they're called away on Friday at $79. And then what would that do to the annualized? It'll just bring it down a few ticks. But I would be happy with Gilead around 20%. And I'd be happy just letting them right off into the sunset as well, so I can regroup and reposition myself, hopefully for some more quad D, aka the money tree trades, because those are very exciting for me. So that is Gilead. So if you go bye-bye, then I'll say bye-bye-bye. Keep it going here. There's Hood. Right now there's going to be called away, but of course it's going to depend on what goes on with those earnings after market today. Coke's getting some pressure on it. It's over $57 today. Big Mo is doing just fine at 91% profit. And we got Merck. Merck needs some help. It's like trading at 104 and change. So waiting for that to come back. And then Square making a comeback this week as well, putting pressure on me at the 52. You want them? Come and get them. Is it at 52 yet? It is at, oh, it's gone down a bit. It was over 51 when I looked at it earlier, but it's at 50.85, putting the pressure on my $52 calls. If it's not going to be called away, I'd love it to be really, really close to that 52 so I can crank out some big time cash in my pocket to roll those calls, because there's a lot of volatility on Square. Teladoc, it's about 50% profit. So we'll keep an eye on those. In fact, that $18 is $2 a share under what I paid. So that, we do not want to see those called away at 18. So we'll manage that towards the end of the week if needed. Target's green today, but it's showing that I'm at 85% profit on that trade. Let's see where they're at. Oh, they're just above 111. So 111.38. I got 118 calls expiring on Friday. Hopefully that'll end green so we can just keep rolling those as well. Tesla 230 calls. Is Tesla at 220? It is not. It's down today. It's at 217.44. So still plenty of time. You know how quickly Tesla moves up or down. And then Wynn Resorts is under pressure, and that's fine if they get called away at 95. See you next time. Exxon Mobil, put that trade on one day too early. I put those on yesterday. Looking for the quad D, looking for the AKA money tree. You got to call it one or the other. You really do. You can't just keep saying AKA. So let's see. ExxonMobil currently at 103.83, and I traded that yesterday it was at 105 and change. I went with the 105 put with the hopes of being assigned at 105, but of course, psychology dictates that you don't feel good being assigned at 105 when it's traded in the 103s. That's psychology. But we're looking to get 4 paydays on that, because ExxonMobil goes ex-dividend on, what is that, Tuesday, and they'll be paying me 95 cents a share for the dividend, and then on a green day, we'll sell the calls, and we'll sell it above the 105, because ExxonMobil has pretty much been trading between 100 and 110 all year. Does oil still have a little bit more downside left? Maybe just a little bit more before it goes back up. And I think it's going to go up to 100. I'm still sticking with that thesis as far as per barrel, $100 a barrel. If it does, then you're going to see all my sweethearts making me some rain. It's going to be raining up in here. So that is where we're at right now. Update. Thanks for tuning in. Maybe back again today. Who knows? Who really knows? But thanks for tuning in. Subscribe, like, comment, and you know what we'll do? We'll see you in the next video.